Hi, Brijesh. Hi, Roopa.
Hi, how are you?
Hi,
Good morning, sir.
Hi, good morning.
So,
thank you so much for both of you for joining. And let me do a quick introduction, and then I will hand over to Rupa to ask you some very interesting question, Rashesh bhai. So let me start with Rashesh bhai, and thank you so much for accepting this invite to speak at MasterStroke Forum. And I wanted you to be here, and I requested Radhika also that we want Rashesh bhai to speak because many few mutual fund distributor finance professionals have heard you, Rashesh bhai, in their professional journey. You have been very, very under the limelight, and we would love to have your life journeys experience today. Rashesh Shah is the chairman of Edelweiss Group. He has 3 decades of diverse experience in the financial markets and has been instrumental in building Edelweiss into one of the India's leading diversified financial services company. Rashesh is passionate about financial services and the role it plays in translating India's vast savings into investment, thereby powering economic growth and development. A regular commentator on macroeconomic policies, Rashesh has served as the president of FICCI, which is India's apex industry association in 2017 and 18. He has also been a part of the high-level task force on public credit registry for India, the Insolvency Law Committee, Executive Committee of the National Stock Exchange, as well as the Committee to review insider trading regulations set up by SEBI, the country's capital market regulator. An MBA from Indian Institute of Management, Ahmedabad. He also holds a diploma in international trade from the Indian Institute of Foreign Trade, New Delhi. Welcome, Rashesh.
Hi, everybody.
Thank you. And a quick word for Rupa, my dear friend for last 15, 20 years. No introduction needed for the MFD community for Rupa because probably everybody who is on the show have met Rupa, spoken to you, but still I will do the honors by giving a very brief profile of Rupa. Roopa Venkatkrishnan has been a part of the mutual fund industry since 2003 and has been impacting the lives of a diverse set of clients placed across the continuum of economic strata and financial background. She takes pride in creating HNIs and spreading financial literacy across all sections of the society. She is passionate relationship maker with a focus on creating long-term abundance, harnessing the power of compounding embedded in equity investing. She believes that managing emotions of her client is a key deliverable which plays a significant role in wealth creation in the long term. Her notable achievements were being getting the award from CNBC UTI Award for Best Performing Mutual Individual Financial Advisor Women National Level in 2014-15, and and also getting the CNBC UTI Award for Best Performing Individual Financial Advisor Women West. So over to you, Rupa.
Thank you so much, Brijesh, and thank you for this nice introduction. Thank you so much, and very good morning to you, sir. And it's been a privilege that I will be moderating this session with you, and I have had the privilege to meet you once and hear you. And it just impressed me with the way the vision and the thought process that you have had in the last 3 decades. So I like to start saying that it said vision is the vital energy that drives an entrepreneur. And as a topic is about vision to mission and how do we have resilience in challenging times, I like to start with this question saying that how did you envisage the future trend and define and pursue your vision for Edelweiss?
So again, Roopa, Brijesh, thank you very much. I think very excited to be here. This is a great event and I think it's a great audience. So I'm truly honored and very gratified to be here. And yeah, Rupa, I think what you said is very important. And I think, sometimes things like vision and mission become very a big statement. I think there are a lot of entrepreneurs, a lot of investors on this show. And we all, I think, try to balance the long term, short term, the vision, the execution, all of that. So everything gets co-mingled. But I think we were very fortunate. I do believe that I graduated in 1989. India started opening up in 1991. I joined ICICI after my MBA. We were very fortunate that I think when I had about 5 years experience, is when India's capital markets, India's financial services. If you go back and see, and it's always everybody says you can connect the dots in the past very easily. It's very hard to connect them in the future. But if you go back and see a few of the events. We had obviously the India balance of payment crisis in 91, but we had, the mutual fund industry got privatized. Until then, there was only UTI, the private sector mutual funds started from 93. The FII investors were allowed from 93. The private sector banks came in 94. NSE, SEBI, automation, all of that happened between 93 to 96 in that era. And obviously, after that, there have been a huge amount of changes in the capital markets. But we were very fortunate in that sense. So I think part of the vision is also the environment. And it's very easy to look back now, but at that time also it felt like something new was happening in India. And I remember I was in ICICI, I was in the export department, and we had clients like Infosys and others who were the new age entrepreneurs, new age companies in India. A new India was getting underway. And I think post 1991 is where India was born. In that sense, the economic part of India was born. So I think that was a very interesting phase. And our idea was that India capital markets will play a big role. And the broad hypothesis was, which I think has partly come true, and obviously it won't ever come true in this completeness, because I think we thought India will be like Wall Street, and there'll be credit default swaps and trading and all of that. Some things have happened. Equity markets have outperformed our expectation. I think the credit markets are still not developed as much as I would have thought at that time. But our hypothesis was that India financial sector is going to undergo a lot of change. And from a very bank-centric financial sector, will become bank plus capital markets. And I think that broadly has come true. And we have all been beneficiaries of that.
Oh, absolutely. But as you rightly said, saying that, joining the dots, if you go back and join the dots, it sometimes you feel saying that it all fell into place like a zigzag puzzle. But now I have to ask you, saying that with all of that, how did you build on your confidence and expertise at that time when you had already established players like the DSPs and the JMs and the Kotaks and the Enams? How did you have that vision for Edelweiss?
So I think having good quality players, and in fact, capital markets in India was in a way highly competitive, but also there was a benefit because we have some really world-class players. I think the names you took were fabulous organizations. But in India, capital markets, I think we are also competing with the best of the global. The Goldman Sachs and the Morgan Stanleys and the JP Morgan and the Citibank and the Credit Suisse and CLSAs, everybody's here. So I think that way the banking industry is still slightly more contained because it's not easy for a foreign bank to enter India. Even insurance companies, there was a restriction on, but you can be 100% owned asset management company, you can be 100% brokerage, 100% investment bank, foreign owned. So I think capital markets in India, and especially when we started in 1996, I've seen that you encounter the best quality competition, the best of India and the best of global. At least in the financial services, there were no real entry barriers. And even now they are not. And you constantly see some new firms getting created, new firms entering the market. So I think it's a very vibrant market, and you have to think of this as an opportunity. It's always an issue that if you think like an incumbent, you start getting stayed, you start wanting to maintain the status quo. But if you think like a innovator, a challenger, and I think Edelweiss now we are more than 25 years old, but we have just, set out a new aspiration for the company for the next 25 years. We always say that you should have a 1-year budget, a 5-year plan, but a 25-year aspiration. You can't have a 25-year plan because things will change, but aspirations should be for 25 years. And we have just reset our next 25-year aspiration. So I think that way, if you aspire to be to innovate, and actually I must say at this point, there are a lot of people experts in financial services here. There is a belief that in financial services, how do you innovate when there are so many good players already there, banks and all the names you said? How do you innovate? Because a home loan is a home loan, a mutual fund is a mutual fund, a credit card is a credit card, a brokerage account is a brokerage account. How do you really differentiate? And we do believe at Edelweiss, we believe that product innovation. And even in our mutual fund, things like Bharat Bond and Balance Advantage funds and all of that, we have always said, how can we innovate? And innovate not just for the sake of innovation, but innovate to meet the needs of the customers. And the good news, Arupa, is that customer needs are changing. They're evolving all the time. And incumbents are usually slow to understand and react to customer needs, and they obviously have the legacy issues. So I think if you think like an innovator, like a challenger, like an outsider, and it's always hard to maintain that, but even as you get older, I think if you can maintain that, there are always opportunities. Even today, I think the opportunities are more than what you can execute on.
So, sir, as you rightly said, I think I resonate to what you said, because that's what Jeff Bezos, I was just reading about him a few days back, and he talks about exactly the same, saying that you need to concentrate on what you believe in, what the customer wants. Your innovation has to be something very different. You might be different, but at the end of it, if it's simple and different, you're always going to be successful over a period of time. And I think you resonate the same thing. So now, if you look at the last 25 years when Edelweiss started, I have a very pertinent question saying that, there have been so many changes over the period of time, dynamically. External changes in the world. We also have changes in the regulatory environment in the country. We've kind of gone through our crisis. So how did you navigate the changing environment and develop plans to meet the different business models that you just spoke about?
Yeah, I think it's always, it's a very interesting question. And, I think we human beings are a very strange animal in that sense. We enjoy change, but we hate change. I mean, if you ask any individual, we all go on holidays in a cramped plane and with a different time zone, and you are jet lagged, but still we go on holiday. Well, why don't we have holiday at home? And that is a question you always ask, because I think we crave change also, but we also hate change. I mean, I hate to change my phone, my computer, because we want the stability, the normalcy, all of that. So I think if we see change as an opportunity, and it's an attitude and a mindset thing. I mean, it's a very cliched thing where you say glass is half full or half empty, or the guy who goes to an African country and says here nobody wears shoes, and as a shoe salesman, you can either say there is no opportunity or you can say there is unlimited opportunity. It's the same thing in different way. It's a mindset and an approach thing. So I think in Edelweiss we have tried to cultivate a thing that change is for your good. So constantly changing, and it's sometimes very tiring. SEBI, RBI, they change rules and then new circulars come, and everybody complains about change. Everybody hates change, but everybody wants to, also evolve. And Indian capital markets have evolved a lot. So I do believe that change is always beneficial in toto. Maybe individual items of change you might like, you might say this is useless, this is not required, but you have to embrace change. And all these are cliches also, but I think having a mindset, and I think one of the other things that we have tried to do is to also get the same kind of people. So a large part of our management team, the CEOs of a business, they also thrive on change. So we all actually feed on each other when we argue and say, oh, this change is going to be harmful or market will not grow. We say, okay, all change is good. In the long term, it always going to be beneficial if you are searching for opportunities. And you know what? Even if environment is not changing, customers are changing. I mean, customers like at one point they like polyester shirts, then they like cotton shirts, they like big bell bottoms. Then they write narrow jeans. So customer needs will always change, and that is how it is because human beings crave change. So I think anything that gets routine and all, markets evolve, customer needs evolve. So like in financial services also, the customer needs are constantly changing. And if you're in touch with your customers and actually more importantly, your employees, because employees in financial services are an extension of customers. They are the link to the customers.
Yeah.
I mean, I hardly talk to as many customers as my colleagues do. So if you talk to your employees, you talk to the customers, you embrace change, you have an innovation mindset in the organization, things work out. You'll make a lot of mistakes. And I think the tolerance for mistakes is also something you need to cultivate.
Oh yes, absolutely. Because my next question again comes down to that, because I don't want to break this, saying that how does resilience contribute to be a successful entrepreneur? Because it becomes essentially important with the kind of changes, because you're handling two kind of, at the helm of your organization, you are actually handling your employees and you're also handling your customer, and on the other side, you're also handling the regulators. So how do you bring in that resilience as a successful entrepreneur?
So we always say that in our business in financial services there are basically two big gods and one slightly smaller god. The two big gods are employees and customers. They are the big gods. They are the ones you have to follow. You have to understand. You have to be in sync with them. They dictate the terms. They are the sun and you are the earth. You have to orbit around them. It cannot be the other way that you are the sun. So employees and customers are the big gods, and the other what we call stakeholders, which means the regulators, your banks, your all the other stakeholder investors also are part of that, are the ones who will benefit if you do the first two gods right. So if you understand your customer and employees and do the right things, the stakeholders will also benefit. You need to keep that in mind. But I think the stakeholders are automatically served if you serve the first two. And obviously your organization value systems have to be right, saying we'll not do the wrong things and all. So you can manage stakeholders a lot easily. I found managing the stakeholders and regulators is a lot easier if you're getting the first two right. But I think the first two are very hard, constantly changing. Employees also, people are getting younger. I mean, I now when I go to an office meet and all, I find people who are 28 and 30 and 35 years old, and I feel very old and I feel out of touch. So how do you stay in touch? How do you constantly understand what is and don't let your biases get in the way? And all these are important ones. All these are important parts of the organization. So I think, and you used a very important word, as you embrace change, being resilient is very important, and there are many versions of that. One is resilience is equal to being able to bounce back. Yeah. And there is a very famous quote from the Batman movie which says it's not important how often you fall but how quickly you can get up. I think more than that, the resilience is also, can you get up? Are you stronger? Are you better? Have you learned from your mistakes? So I think the past is always going to be filled with a lot of mistakes. The future is always going to be filled with a lot of uncertainty. In Edelweiss, the culture we have is when we look at the past, we say, what have we learned? How have those things made us stronger? When we look at the future and the uncertainty and we say, okay, how do we plan for it? What are the contingencies we can build? Because all that you can do is in your life is you can learn from your past and you can plan for the future. I think outside of that, everything else is you are human being, you are normal organizations, the challenge is always there. But being resilient has become more and more important as the world has become more the VUCA world and all. So can you bounce back, but not just bounce back? Can you become stronger after bouncing back? It's like what is called anti-fragile. That whole thing about steel. When iron goes through heat and pressure, it becomes steel and it becomes stronger than what the original form was. So you can use stress and challenges to become stronger.
So I just learned today saying that, that being anti-fragile is so important because, in the last 2 decades of the journey, I've only found saying that every day is a new challenge in the financial world, because every day morning there is a new news which is happening. There's so much of noise across. And the investment journey is so simple, saying that you invest and keep long term and you are going to, but it's not as easy as you say, because every day morning when you have to handle your investors and your own practice, that resilience. And I think today you taught me a word which is anti-fragile. I think that's very interesting. That's something to learn.
But Roopa, every day is a challenge, but every day is also an opportunity.
Oh yes, absolutely.
Every day is also an opportunity. And you said something very important. How do you keep it simple? So, some time ago, Warren Buffett was asked by, I think the CEO of Amazon, Jeff Bezos was interviewing him and asked him that what you do seems so easy and so simple. Why are not more people doing it? And his answer was because everybody wants to get rich fast. I'm comfortable getting rich slowly. Yeah. And I think that itself is a very insightful one. So I think being long-term, being patient, that doesn't mean you slack off and you don't really, aspire to grow. But I think being there for the long term is very easy and very hard. It's very easy to understand, very hard to execute.
Oh, absolutely. Absolutely. So my next question is saying that how do you enjoy most being an entrepreneur? What do you enjoy most being an entrepreneur?
I think the two parts that over the last, more than 25 years, one is constantly being able to learn, constantly learning new things. And it's amazing, even even though, I mean, you've done MBA and you've studied cash flow and capital allocation, you learn it in real life. So I think learning is a constant journey. And I think as an entrepreneur, I think that has been one of the biggest things I've enjoyed. And the other one has been working with smart people. I mean, in Edelweiss, we have had so many leaders who have, grown and again got developed. And I find that the newer age, leaders are so much smarter than what we were. They were so better. They are so much more grounded. They learn so much faster. So I think the two gratifying things have been learning constantly, being able to, and then after you learn, you say, but this was so obvious. And but you have to learn. And I think that is the one thing. And the other is leaders. I think I've been very fortunate. We have had some of the great leaders constantly growing, doing new things, smarter things, and actually outpacing all of us. And that has been very gratifying.
So, sir, let me add one more layer to this question and ask you, saying that if you look at the pace of the business that is going, that we saw in the last 2 decades, in the sense in the last 2 decades and in the last 1 decade, I think the pace of the change and the pace of way things are happening is much faster than what it used to happen 2 decades ago. So how important is agility to be in your business?
Absolutely. I think all of the world, I think things are changing much faster. I think obsolescence is, setting in very fast. 30 years ago, if you were an engineer, your engineering knowledge was good for next, maybe 20, 30 years. Now, even if an engineer in 8, 10 years, you'll get outdated. So I think things are changing a lot fast. I think so being agile is very important. And I think what precedes agility is ability to learn and ability to ask questions and debate. And like in Edelweiss, we debate and discuss a lot. We think the only way to make any sense out of this, crazy world and vague information and everything is moving, you can't really connect the dots. You can't really see what is happening in real time. But when there are many voices in the room, when there is, diversity of opinion, when there is diversity of view, I think those allow you to form a better hypothesis, a better worldview as you go along. And those things have to precede agility, because agility for the sake of agility, just throwing your hands and legs around all the time, is not as thoughtful agility. So we like what we call thoughtful agility. So you want to be thoughtful. You want to say, okay, this has happened. This change is happening. What could be the first derivative changes? But more than, we all see the first derivative impact in the newspapers. That's easy. A 3 rupee newspaper, 5 rupee newspaper will tell you what is the, but then there is a second derivative impact and a third derivative impact. And the second derivative and third derivative is what you need to go deeper, ask questions. The uncertainty goes up a lot. The first derivative is very easy to understand. But I think with a lot of good people, smart people in the room with diversity, you can make some sense of what is the second derivative change and the third derivative change going to be, and calibrate your actions according to that. But as I said, and you will be wrong, and you want to be comfortable. You want to be comfortable being uncomfortable in that sense. Absolutely. Because all this is going to be uncomfortable. I think status quo is very comfortable.
Comfortable, yeah. So I think there is a bunch of absolutely highly enthusiastic mutual fund distributors, advisors on this call. And they've been, as Brijesh said, they are hearing you for the first time. And there has always been thought, so that, we look up to people who have been successful in this financial world over the last 2-3 decades, and you be one of them. What would be your advice be to this mutual fund distributors and advisors to cultivate their creativity, foresight, and approach to build their practice in the coming decades?
I think from what we have learned, and having seen India over the last 30 years and in Edelweiss over 25 years, the first thing I always tell people, anybody, India, US, entrepreneur, manager, is, India requires a bifocal vision. It requires a bifocal approach. There is a short term of India and there is a long term of India. Like I say, we are 25 years old, but we are also 100 quarters old. And everything changes in a quarter. And I mean, even in our India, I think the quarter of April, May, June was a brutal quarter. And I think it was like, where people thought, oh my God, stagflation is going to happen, economy, liquidity. I think it was one of the harder quarters that was there. And now after July, August, things are looking slightly more benign. So I think so there is always a short term upheaval, volatility, challenges, drama, and India is a drama country. I mean, in the short term, there is always drama. I can't remember over my last 25 years or 100 quarters, there is ever one quarter where things are calm in India. But so if you get caught up only in the short term, then you will only be handling that and not be able to see the long term. So you need a bifocal vision. Your one eye should look at the long term. And in the last 25 years, India has changed so significantly. But in every quarter, there has been drama that has gone on. Some either it's global financial crisis or India, Pakistan, or some geopolitical event or some political event. Something or the other goes on in India. I mean, we have seen Harsha Mehta, we've seen Ketan Parekh, we've seen 9/11, we've seen global financial crisis. So I think don't get lost in the short term, keep an eye on the long term, but the short term is real. I wouldn't say ignore the short term. You need one eye on the short term and one eye on the long term. And that is, you have to be really capable of that. That bifocal vision is very hard to do in India. I think a lot of people either look at the long term and think India is hunky-dory, per capita consumption is so low that everything will do well. And then in the short term, you have to manage the SEBI regulations and the unit economics and the distributor cost and the mutual fund, industry competition and all that. When you come to that, you have to manage the short term. So I think the short term is real. It is tricky. It is filled with a lot of the booby traps out there. So you have to avoid the short term booby trap. But I always say the short term, use your brakes very well. In the long term, use your accelerator very well. Like in Edelweiss, one of the slogan we have is ideas create and values protect. So it's both, ideas are the accelerator and values are the brakes. So if you are going through a country like India, and if you use analogy of India as a very crowded, bumpy road with a lot of speed breakers and potholes and all, in the short term, learn how to use your brakes very well, but in the long term, use your accelerator very well. Because once you get there, you will get to the expressway and then there'll be an open road. So in the next 25 years, I think India is going to do phenomenally well. The next 3 quarters, I don't know. It will be very challenging, I can tell you. I can tell you there'll be a lot of drama in the next 3 quarters, but the next 25 years is going to be very exciting. So I think keeping that bifocal vision is very important. And everybody says, you have to be long term. But the other two things I've learned is, one is try to out behave rather than out analyze. I think analyzing is IQ and behaving is EQ. I found in the long term, EQ always wins over. Even as an investor, though we think investors are supposed to be this brain power of analyzing a balance sheet and finding the best company with the best ratios and all that. I think ultimately, I think the long term patience and discipline and staying put and not getting swayed by fear and greed, all that I think plays out very well. So I think what I've tried to learn, and I tell my colleagues also, and it's very hard to do, if you can try and be wise instead of being smart. I think smart is always good, but in the long term, I think I do believe that wise always wins over smart.
So thank you so much, sir. This was absolutely precise, clear, and so confident, saying that people here would say that in next 25 years, that was something which is very important, saying that we have 2 or 3 decades of, India doing very well. So you can actually plan, practice, and build in a very creative and a foresightful business plan for yourself. So the most important element, what I have seen as I have traveled across the country and met a lot of mutual fund distributors and everything, what is important is that conviction, which is lacking, the conviction to believe, saying that India will do very well. I don't know. I have been a very strong believer saying that India will do excellently well. And I have stayed put in the last 20 years. And I still believe saying that India will do very well. I think we will do much better than the last 2 decades. But I think that conviction is something which is missing across the customers, the investors, and also within the distributors who are there into practicing their business. What is your advice saying that how do you bring that conviction?
It's always a challenge. I think ultimately everybody is human beings, and I must say India will challenge your convictions. It's very easy to say I'm here for the long term, but long term is say 10 years. But when the first year is bad, then the second year is bad, when the third year is bad, at the end of 3 years, it takes huge amount of conviction or confidence to say the long term. Everybody says long term, but the short term will challenge you. And I think knowing that, accepting that is also a good thing, that your convictions will waver. And it's like, will you question staying? Will you do that? But if you can control your greed and fear and try and create the barricades or the guardrails around that and not allow your greed and fear to go too far. So I always say, don't say that you will not have greed and fear. You're going to be a human being. You will have greed, fear, all your emotional swaying and all. If you can make sure your emotional swaying doesn't take you too far out कि कल morning में सब portfolio बेच दो और खाली cash or just buy gold or just buy real estate. I think believing that portfolio allocation works on the long term, India will do well. You will have to go through all the khadda gullies and all that to get to the highway in India, and you will have to go through that. You can't just fly over them with your conviction. So I would say your convictions will waver. You will get questioned. India will challenge you. In fact, there is a very famous quote that India works very hard to keep an optimist and a pessimist both happy.
Oh, okay.
So India will do, things will happen. There'll be economic, setbacks. There'll be all of that. But in that, keep your guardrails out there. Keep your, I think make sure your short-term swings don't take you away from the main road. You stay on the main road, you will go this side and this side. So give yourself some room to waver, but don't, waver to the extreme. That's the best you can do as a human being. But first, accept that you are a human being.
Absolutely. Thank you so much, Sir Brijesh. If you want to have some questions that you need to ask.
I'm frankly speechless. But I've made a couple of observations and I want to ask a few questions, and I also want to read a few comments in the Q&A and some questions. But before that, I would like to take this liberty to ask you, sir, a few questions. What is the best advice you have ever received in your life?
Yeah, I think the best advice I got was from Mr. Narayan Murthy when I was in ICICI. In fact, I didn't want to be an entrepreneur. I come from a business family, so I had done my MBA and all that to make sure I don't have to run my own business. I wanted a job in a very highly professional organization. I got into ICICI. I was there, but his thing was, I think, there is don't see the past and the future as the same. And I think that was this thing. The future is an extension of the past, but the future can be very different. And I think I've also learned that. And I mean, even as an investment banker, when we were talking about customers and all, I find that we treat people as what they were 3 years ago. And people say, hey, this guy, he used to come and sit in my office. Some smart people will treat you the way you are now, but it takes really an exceptional banker to treat you what you will be 3 or 5 years from now. And I think ability to not just be focused on the past, but look at the future. And it was him who said that the next 25 years of India will be very different from the last 25 years. And this he said when he was trying to convince us we should be entrepreneurs. And I think he was one of the catalysts who made us realize that there was a new India getting created.
All right. My second question is, you run such a large organization, hundreds and thousands of people, a real conglomerate. What is your typical day like? How do you manage things? And how is your, at this part of your life, your typical day like?
So I think every day changes a lot. But one of the things we have achieved is we have some great leaders in our company. So I think in the last 8-10 years, I have very consciously tried to make as few decisions as possible. And if I have to make decisions, I would rather make decisions which have impact over 1 year, 3 year, and 5 year, rather than which have impact in the short term. So whether some new office has to be leased or not, or whether some area sales managers to be hired or not, uh, a lot of that are now the business heads, our CEOs, and we have a fabulous team. We have eight businesses in Edelweiss Group. Each of them is a fabulous, CEO management team who are very empowered. So we try to make sure that we don't get too much into control and decision making, because I found that empowerment works much better. But you have to work a lot on people. So I think hiring people, developing people, that's actually one of the large part of what we do. We do a lot of reviews, so I'm involved in a lot of reviews. We run a lot of projects, projects on cross-selling and technology and customer research and all that. So I think a lot of projects go on. So between projects and obviously customers and stakeholders and the regulators and all, so every day changes a lot, but I try to balance my time between these four things. I think strategic projects, review, stakeholders and customer management, and our people. Because I think people are the most important factor. If you don't have people, you will be very busy. If you have good people, you can choose what you want to be busy with.
Fantastic. And in the interest of time, Rupa, you might take a question, but I will read this by Sudipto. Every sentence of Mr. Shah is an education. His insightful comments needs post-session transcript. This session must be a crash course in entrepreneurship for mutual fund distributors. Thank you, MasterStroke. He's so young. And then he closes by asking this question, which I want to ask you. How did he manage to stay young?
I think I always say the organizations have to get old faster, because the older you are, you have learned more, you build your institutions, you build your internal processes, your learnings of the organization. So, I mean, I do believe that after 20, 25 years, the innings really starts as for an organization, to really. So organizations have to get old very fast, and individuals have to stay young a lot slow. I think we all become old a lot faster and wise a lot slower than we can. But I think one is having a lot of other young people around you is always, because the younger people will question you. And we have people in their 30s and 40s in the leadership groups who don't agree with me on a lot of things. But that them not agreeing will keep you young. I think understanding because they are obviously a lot more connected to what is happening on the ground, what is India today, what customers are today. So I think I always say hang around with young people, take risk on the younger people, give them the benefit of doubt. They will surprise you, and they will surprise you on the upside most of the time. So I think that is one way. And otherwise, I think we all struggle to stay young. But I think having a hobby, having a sport like I know. I love to run, swim, bike, do marathons and triathlons, and having all of that also is another way you can try and stay young. So I don't say how to stay young. You can try and stay young, but I think a lot of that is in the mind. And one thing I found is if you are learning, you are young, because when you are young, you always learn very fast. So as you keep on learning, I think you will hopefully stay young.
Thank you so much, and gratitude to Rupa and Rashesh Bhai for doing this session. Rupa, any final question, any final take?
So can I have your last question that I want to ask you is saying, like, what do you wish you could have done something differently?
Lots of things, but I would have invested a lot more in technology. I mean, to be honest with you, I think we have been behind the curve. Maybe because I think internet was there when we started around 25 years ago. Also, internet was there. 2000 there was a bubble that also burst, but I think the internet was there in spite of the bubble bursting in 2000. We worked with a lot of internet companies and startup companies in early days in Edelweiss. But I think we didn't understand the power of technology as much. The second is we started our retail journey. Edelweiss started off as a wholesale organization doing investment banking and more B2B. We started our B2C only about 8-9 years ago, our insurance business and the mutual fund and all that. I wish I had started the B2C journey also a lot faster, because I think the consumer, the B2C part in India is much harder to build, but much more scalable, much more granular. You can really, and it's also evolving very fast. So if you learn and understand, so I think the two things I wish I had done a lot faster earlier, and more of that was invest in the consumer side. I mean, in Edelweiss today we have now 8,500 people. 80% of them are on the retail side. Only 20 are on the wholesale side. But we started as a wholesale B2B organization. I wish we had become more B2C earlier. It has been a learning journey, because changing the culture of the organization also been harder. And I think we should have invested a lot of money in technology, not worried about profits on an annual. If we had invested 30, 40, 50 crore every year more in technology, I think it would have been very helpful.
Thank you so much, sir. Thank you. And it's been an honor to be here and moderate this session. And thank you, Brijesh, for giving me this opportunity, and wish you all the very best.
Pleasure.
And thank you so
Absolutely.
much.
Thanks a lot. You all been, very kind, very patient, very supportive. I really enjoyed this. I think the questions were very insightful, and obviously this is a great platform, great audience. And thank you, Brijesh and Rupa, for giving me this chance to interact with all of you. All the best.
Thank you, sir. Thank you so much. You have a good day.